Though cotton prices are ruling at an 11-year high globally, fundamentals in the natural fibers market are changing that a fall from the current level will be sharp and quick, says Indian Texpreneurs Federation convener Prabhu Dhamodaran. Cotton has touched a 10-year high and its prices are advancing daily, both in the international as well as the Indian market. Abundant liquidity combined with robust demand for goods has created a bullish momentum during 2021. But now, all fundamental factors are changing and it's time to be more alert on purchases and inventories, he said in a statement. Currently, cotton futures for March delivery on the Intercontinental Exchange, New York, are ruling at 128.08 US cents a pound. Globally, cotton prices have increased 13% since the start of the year and 58% year-on-year. In India, baled cotton is ruling at a record 77,500 to 78,000 Indian rupees a candy in Gujarat. On the multi-commodity exchange, cotton on Wednesday ruled at 38,100 Indian rupees a bale or 79,785 Indian rupees a candy for March contract. Raw cotton in Gujarat Rajkot District's Agricultural Produce Marketing Committee yards was quoted at 9,500 to 10,000 Indian rupees a quintal. Cotton futures on ICE are currently quoted at 123 US cents for delivery in May. Indian cotton prices are ruling at a premium to global prices since some of the multinational firms trading in cotton have hedged their positions in Europe. Dhamodaran said factors that influence price correction include drop in demand for fashion goods due to inflationary trend across all markets and a shift in spending towards services. The US and UK retail sales contracted in December and the January Consumer Confidence Survey in the US fell by nearly 6% to its lowest level since November 2011, he said. The ITF has got feedback from international markets on customers' resistance to accepting high prices, and the signals are reflected in confirmations of new orders from developed markets, he said. Cotton is not an essential commodity like edible oils or rice. Its demand purely depends on the spending power of people. With inflation on the rise, the spending power will be put to test and lot of demand destruction is inevitable for cotton going forward. Dhamodaran said. On the other hand, alternate fibers are replacing cotton due to its high cost. We are witnessing this change in many weaving clusters in Tamil Nadu. This will also rebalance the demand equation, he said. In addition, the textile industry is facing resistance from value chain partners even up to retail outlets in domestic markets, due to high prices. The inflationary trend is also hitting consumption and retailers are opting for alternate fiber products, the ITF convener said. Developed countries are tightening liquidity and raising interest rates. This will reduce the speculative interest in cotton, particularly at these record levels, he said. Pointing out to the fact that prices of most commodities ruled at a decade's high last year, Dhamodaran said many of these have corrected by 15 to 20% from the peak levels and cotton may also witness such a trend. While all these factors will affect consumption of cotton, he said projections of robust cotton planting across the globe will also lead to a bearish trend. Initial reports from April on higher sowing of cotton will naturally check speculation. The current bullish run lasting over a month and a half is mostly speculative in nature and the current price levels are not sustainable, he said, adding that ITF member manufacturing firms have been asked to deal with the situation carefully.